I'm Keith McCullough, and welcome back. For me, this is my last one. Josh Steiner's going to take the last one. So I have my closer, and it's the first time that I've ever had a real conversation with Tracy Shuchart. But the closer, we had to choose you because you close so many. You have so many good one-liners on Twitter. You got great, you got great closing. I mean, there are a lot of people actually out there that need an education. And the first thing I wanted to say is thanks for joining me. But thanks, on behalf of a lot of people, right? I mean, we have an environment where people can be spoon-fed some bullshit narrative pretty much every day, but you're as active out there as anybody I could find. So I want to thank you on behalf of everybody who's a fan of yours. They've given us a lot of feedback on that.
Well, thank you. It's a pleasure, and I really appreciate being on today.
That's cool. So how does a girl go from USC to the CBOT?
So, well, kind of a long way around, actually. I took a career detour first. So I was actually in medical supply sales for a long time. And I decided one day I was just hated traveling all the time. I didn't like my job. I was, selling plastics, medical grade plastics. So how exciting that is. So I quit my job and moved to Chicago and started knocking on doors and at the CBOT, because that's what I wanted to do. So
you did you actually want to be a trader, or you just didn't want to be selling plastic bottles?
Well, no, I actually wanted to be a trader. My dad was a broker, so
okay.
Kind of friends in the family.
Yeah, and you kind of got that swag, not kind of. You explicitly have it. It's your Twitter handle, right? You got Chai Girl is your Twitter handle. For those of you that don't follow her, you absolutely have to. But is tweeting a little bit like trading?
Sometimes, absolutely. You have to weigh, should I have tweeted that? Should I have not tweeted that? How is this going to come off?
Yeah, I don't really have. I don't think you have much of a mute button or anybody auditing your tweets or censoring you. So that's good. But I mean, I think in this day and age, let's just take the topic of the day. I mean, I do think that people like you who have experience, and it's really street smart experience with practical trading experience, you can kind of really bring the thunder in an environment where people, like I said, it's total bullshit. Like when you go up to somebody, I've been using this one-liner all week throughout the Investing Summit. You go up to somebody at a grocery store at Stu Leonard's where I live here, and tell the mom or the dad, whoever's with the kids, that there's no inflation in that store. And I mean, they're going to mock you, or they're going to think that you're some alien. I don't know what, but let's start with that topic of inflation, which clearly continues to accelerate since hitting a cycle, kind of a cyclical trough in June. But what do you what are you trying to communicate when you're going at it that way?
I think when we need to talk about inflation, what we need to talk about is inflation is always increasing. That 2% is just the 2% they want it to raise per year. So when you say inflation's coming down, it's the pace of acceleration that's coming down. It's not actually inflation coming down. And I think that concept is kind of misunderstood by people a lot. And I think that it's going to continue because I think, we're in for higher for longer commodity prices, particularly energy, which runs the entire world. And so I don't think, I think the Fed is going to have a really hard time getting to their 2%. And eventually I think they're going to have to accept a higher percentage or completely destroy the economy.
And when you see the underlying, so let's just talk about components of energy inflation that you're either trading or analyzing. Can you kind of go through what you see as the most blazingly obvious to somebody who may not trade anything at all?
Yeah, well, I think the most blazing obvious thing is obviously you're going to be looking at when you want to be analyzing kind of the energy input cost. The biggest thing you want to be looking at is diesel, because diesel makes the planet go around, right? You can't farm without diesel. You can't transfer goods without diesel, whether that's domestically or internationally, marine, heavier marine fuels and things like that. So I think you really need to look at diesel as kind of the energy input that's moving the world.
And if I'm like sitting here looking at diesel from just a trading perspective, and all I'm doing like Dumbo that I am is trading the price volume volatility signal. Yeah, I'd clearly be long that. It'd be long propane. We've been long crude. But like, what do you do in terms of your research process? Like, because you have so much, like I said, so many tweets that really they don't have to do with what I just said all the time. There's a lot of fundamental research being done there. What's your process like day to day when you're researching this stuff?
Well, I think, when I start, obviously, I start very early in the morning, and I start with, obviously, looking at what the markets did overnight, obviously, and then, read a lot of news to see what is happening, what's happening in the Middle East, what's happening, what geopolitical risk is there going on, what's happening in Africa, what's happening in Asia, what's happening, as far as all these markets are concerned, because I'm looking at it from a global standpoint, not just from, say, a North American standpoint.
And do you think that, I mean, like, let's just take the Middle East because it's the hot topic du jour, and I'm not the biggest fan of being a macro tourist, and you aren't either. I mean, you're hitting lots of topics, not just what's trending that day. But do you think that what's going on in the Middle East is understood or misunderstood from a market's perspective?
From a market's perspective, I think it's a little bit misunderstood in the fact that there's just so many geopolitical players that are involved, and that it's essentially a powder keg, right? So one thing can, trigger another event in another country. And so I think that, it's just everybody's focused on, what's happening in Israel currently, but really we have to look at all the other players involved, and that includes all the surrounding countries, Syria, Egypt, Lebanon, and kind of factor that into the whole equation. And then also, from an energy standpoint, obviously what I'm looking at is, how is this going to affect energy markets? Is it possible that we'll actually see the Suez Canal close? That I've seen people suggest. I would say no. They basically have their own army, and then backed up by the Egyptian army and the Israeli army. So, I have to take each of these issues and look at what are people saying, and does this make sense, and does this factor into my analysis?
Yeah, and how much of that last part does it make sense? I mean, this to me is really the hallmark of people on, whether it be in Chicago or in New York, Wall Street kind. I mean, it's the differentiating factor between a good trader and a bad trader is the one who has the common sense. So, because so many people, well, never mind. I mean, we'll get into that topic too. I mean, so many people are bought and paid for and believe the Fed's bullshit, for example. But like, right. How much do you rely on? Tracy Shuchart's looking at, she gets up every morning at the same hour and is grinding. And are you depending on your gut or your common sense a lot or not?
All the time. I mean,
all the time.
All the time. You
all the time, buddy.
You read so much, and of course, I go through Twitter because I want to see what are other people saying, what are other analysts saying, what are other countries saying. Obviously, I read a lot of news from other countries as well. So I kind of have to see, okay, so what is kind of the prevailing analysis that's going on right now? And, do I foresee this a possibility, or do I think this is just an insane suggestion?
So, I mean, on Twitter is where you find a lot of insane suggestions, because that's where all the biases are. I mean, how often, I have my own answer for this. I'm curious as to yours. How often do you find, just the feedback being valuable as a contrarian signal to anything you tweet?
It depends. It depends on, when you put something out there, you're opening yourself up to a lot of responses. Right?
Exactly.
So, some of them are helpful, and, some of them are insane, but
yeah. But there's not like, I mean, I'm not afraid to learn like where I'm wrong. I mean, if I tweet something, and you have more followers than I do, but I know that if there's somebody out there that knows that what I just said is categorically and mathematically wrong, that they will tweet that
yeah.
at me. You know, they need to stand on that hill because it's like a once a year thing for some of these people, and I'm happy to give it to them. You know, I don't. How is that? I find that this is actually part of who I've become as an analyst. Is that I get to be wrong faster because my audience is going to make sure that I know how dumb I am on certain things.
Absolutely. I mean, that's, that comes at the course. And nobody gets everything 100% right. Everybody is wrong at times. And so, sometimes it's good to put things out on Twitter just to see what is the narrative, and, am I thinking right or wrong on this? And what are other people thinking about this? So I think it's very helpful to put stuff out there and to see what other people are saying.
Yeah, because you get that direct feedback. Talk about being dumb. I'm going to use a quote that, at least one of my favorite quotes in terms of preparing for this that I read from you. Our leaders are dumb and woefully negligent.
Yes. Well, there are, and that is something that I've repeated often, because when I look at the prevailing energy situation going on right now, particularly with all this ESG and the green transition. I mean, you have to look at some of these leaders and say, really, what do you think? What are you thinking? Are you really that crazy? Just like, for example, Germany closing down all of their nuclear plants only to reopen coal plants, but being on a green transition plan. So you're either, dumb or woefully negligent in how you're trying to pursue your goals. Yeah, and that's just
I love it. I mean, it's like, and what you also did, which was very few people do, which you roped in my homeland. You didn't just say the U.S. government or the German government. You said the Canadian government. Which is as we have a special relationship, us Canadians, with those in Chicago. It's actually one of the places that most resembles, kind of the culture. How about that Canadian government and my buddy there, Trudeau? What do you think? What do you think their impact's going to be on energy markets or on ESG or all the above?
Well, I think this is and I lived in Canada for 5 years.
Oh, you did? Where?
Yeah, I lived in Quebec.
Oh, Quebec, tu parles français ou non?
No.
No. She's like, no.
The terrible American that lived there that didn't learn French. But I think those, I think that the policies currently in place, particularly when you're looking at things like the carbon tax, which is only going to hurt, say, the farmers, right? Because you're raising their costs, their input costs. That this is going to, in turn, raise the cost of foods and other goods, that are affected from this carbon tax. So you have to kind of look at, I think, I think it's a little aggressive, and I think it's counterintuitive to what you're trying to do. And I'm trying to put that as nicely as possible.
Well, I mean, there's no, I mean, I think it's the simplest way is just to call it dumb. I mean, you're like, it's Elon Musk. I just finished reading his book. He uses it all the time. I mean, it's like if you know more than somebody else, or somebody is completely and obviously negligent, like you said, or politically compromised, I mean, that's a different thing, right? I mean, that you can be dumb, like Elon says, like, okay, I asked you to build this with the cheapest material and you're using expensive material, why aren't you? And you don't have an answer, you're dumb. I need somebody smarter than you, okay? That's like the practical business person. But on the government side, you've been critical, and I have been too, but I mean, I love some of your one-liners on Janet Yellen. She's not dumb. She is. You wouldn't say on paper, actually, that anybody at the Fed, they'd say that they're really super duper smart. But this is like, can you get into that? Can you get into, they are, to use your words, woefully negligent when they talk. Janet Yellen, for example, let's use her recent comments on the bond market.
Well, yeah, I mean, obviously, her recent comments were, she sees no problem. Absolutely no problem with the recent dive, of course, but she's also well known for saying those sorts of things before. We heard her say back in 2007 or 8, we're never going to be in a recession again. So using those terms, those absolute terms, are really not smart and kind of negligent when you're talking about the economy, which is ever evolving and really depending on the policies that the Fed puts in place, the policies that the United States government puts in place. And so I think that is a big problem, particularly when it comes to her, because she likes to talk in these absolutes.
Mm-hmm. And she's a former, head of the Federal Reserve who was allegedly apolitical, not. But we end up in this place now where, I mean, it looks to me at least, and if I take, I have my thoughts are nowcasts, are forecasts on inflation and stagflation, and you have yours. They're similar. Do you, like, if that's right, it appears that for the first time, at least in my career, that the Federal Reserve is losing control of the bond market. What do you think?
I think they are losing control of the bond market. And I think the other problem that they're having is that fiscal policy is butting heads with monetary policy right now. And so what you have is you have the Federal Reserve on one hand trying to tighten everything and tighten the market, raise rates. And then you have the Treasury, Yellen, essentially doing the opposite. And you have Congress spending money like crazy. And so, we've got two ideas that are competing right now, and that's not really helping us. And I think that really kind of sets forth that theory of we're kind of in a stagflationary environment right now, right? Because you're creating inflation from the government while you're trying to create disinflation from the Federal Reserve.
Well, it's the joke, right? I mean, if you can pop up slide 117, this is our, you might like this, the Inflation Reduction Act, Part 1, Tracy. So check this out. Like, what is the cost of this program? I mean, you don't know. I mean, let's just say that it's going to cost a lot more, and that's where we're at on that. And the next slide, on slide 118, we call this the Inflation Reduction Act, Part 2. So the pitch, this thing was marketed as this climate-friendly bullshit, and it contained like $500 billion in new spending, tax incentives fully loaded. But that was the pitch back in 2022. Like, since then, those cost estimates have gone vertical, and we're at a spot where he doesn't know what to do with that. So I mean, that's what I'm assuming this is what you mean, which is on the one hand you have restrictive, on the other hand you have the big G spending plus an inflationary impact embedded therein. How do you think politically you turn back those two slides and reverse them?
I think you're going to need a change of government, obviously. I mean, you're going to need some fiscal conservatives in government, right? And that's going to take just a different policy change. Because what's really happening with this Inflation Act, not Reduction Act, it's an Inflation Act, really, is that a lot of these companies that are getting these big subsidies from the government for going green are actually making other industries spend more money, and they're keeping those subsidies and not putting them back into the economy. So what's happening is we're creating a snowball spending effect.
Yeah, I mean, you could see, actually, you just front ran my net. Do you have my slides? Because it's on the next slide. So this is Act 3, which you can see like the first, the left side versus the right side of the chart, and this is the IRA energy provision costs, estimate. So it's like their own estimate.
They ballooned, and they're going to keep ballooning because, what's happening is, we need to expand our grid. There's no money in grid expansion right now, right? Because if we want to put all of these electric vehicles online, if we want to turn everything electric and get rid of your gas stove, have the government tell you what you can eat, sleep, breathe, and do, you're going to need to expand the grid. And the problem is there's no money in for the grid. And the idea was, I think the idea was, we'll give these companies subsidies and they'll help expand the grids, but they're not doing that. So what's happening is, again, we're just creating the snowball effect, and those costs, that's probably conservative, go out another couple of years and that's going to grow.
Yeah, we'll just finish it up with the Reduction Act Part 4 on the next slide, just so that we can finish the thought. But again, this chart, of course, Tracy, shows this impact going into 26, well beyond the election, right? So, that's, of all the things that you read, all the political candidates on the Republican side, I guess. I mean, I don't know how much you pay attention to. I really, it's not my bag. I went to school with DeSantis, but that's about the only thing I know about him. Do you see, is there any political candidate who's taking the grid like right there into their top 3 things that they might be running on?
Not really. Not really. I mean, you have, I don't really want to turn this into a political discussion,
right?
But you have to listen to what they say and listen to what they're attacking. And so far, nobody really has a solid plan for that yet. Maybe Vivek, but only because he talks about energy more than I would say most of the other candidates right now.
Yeah, I mean, he's definitely anti-ESG. I mean, that for one, I actually had a conversation with the company that he owns called Strive yesterday. They're out there like really just saying, hey, this is about governance. And I don't want to make it a political discussion either. I just wanted to know if there's any politician with a solution, because if there's not, then your view and my view of stagflation isn't going away anytime soon. And the number one thing that at least the equity market, which is certainly a bunch of yo-yos relative to the junk bond or high yield market, which I want to talk about next, or the commodity market or the currency market. I mean, I think they've been actually the bond market. There's these other markets that have actually gotten inflation and the structural, sustainability of inflation, if you will. I think they've nailed it. I mean, it's just the stock market that's just like, oh, but if inflation goes down, then bond yields will go down, then I get my 7 stocks back,
It feels like that. Absolutely. Absolutely. It does feel like that. The market, doesn't want to go down. Everybody wants the market to go down, and I think that we have a lot of other things with geopolitical risk right now. We saw a little bit of, the yields coming down a little bit. We saw gold bounce, but that's more of the geopolitical risk trade. I don't know if it's, it's a sustainable move at this point yet.
Well, so you're of the mindset that this is a structural stagflation, correct?
Correct.
Yeah. So structural stagflation means that you're going to have higher inflation for longer, and therefore higher bond yields for longer. So I don't know, why. I guess that's why there's such a rabid need or want to have these narratives.
Yeah. Well, and the Fed, Powell keeps saying this is higher for longer. He hasn't stopped saying that for, a year and a half now. He's that, everybody's waiting for all of these cuts, and literally he hasn't changed his stance in a year and a half. Higher for longer, higher for longer, higher for longer. That's what it is. Now, for some reason, nobody wants to believe him.
Well, it's interesting, right? It's like you and I are, much more from like the Main Street side, I think. Correct me if I'm wrong. I don't want to.
Oh, yeah.
Like when I define or try to define, I've been using Peter Turchin's book called End Times. He says there's the state, there are the elites, and there are the rest of us. And, that's why I use my fingers that way, because you and I are part of the rest of us. And I think the elites really have they've essentially built their entire compensation structure over this downward sloping cost of capital and lower for longer interest rates. And at any sign of a challenge to that compensation scheme that they have, then they're going to tell the Fed that it's time to, cut bait and turn tail. But Powell, even though I call him PE Powell, like he used to work at Carlisle, I did too. It's like he has been pretty much the adult in the room on that. Do you expect, like, I'm sure you get this question, because it's the whole bloody institutional business or the elites that ask it this way. Do you think if we have stagflation, hit a recession, stocks go down harder, that Powell is going to turn tail, or do you think he's going to stand on the line?
I think that I think he wants to save his reputation more than anything. And I think he thinks that if he changes, does a 180, in other words, that would highly damage his reputation. On the other hand, what I think he's going to get a lot of pressure in an election year if we do go into a recession next year. Right. So I think there's going to be a lot of pressure on him, just in general from, all political parties and all the higher ups in government and everything. So I think that is going to be a challenge if we do get into a recession next year. And I also think it's going to be a big problem because the government's going to do everything they can, throw the kitchen sink at it if they have to in spending wise to make sure that we don't hit a recession, because you don't get reelected when you're in a recession. Right?
Well, I mean, they've already done that part. That's actually the problem from a modeling perspective. We show this on slide 107, I think, guys. The rate of change of actually no, those are just the go to slide 110. The rate of change of government spending this year. If you're again, I think that the value in providing rate of change research is that, that's the only reason why we're not in a recession, is because they've spent their brains out and now they have to deal with it politically through this debt ceiling debate or otherwise. I just, when you end up on the line though, this week was really interesting. I don't know how much of your time you spend Fed watching. Is that part of what you do, like commentary?
I do, but I'm no Danielle.
Yeah, no, she's phenomenal, right? So her answer to the question, and has been very consistent, and you don't have to be consistent, you can change your mind, right? And if you're going to be consistent about something, be flexible. But she's been very consistent for almost 2 years now, saying this guy's going to stand on the line, partly due to what you just said, it matters to him. The guy's worth, what, $115 million? He doesn't have to do this job. he doesn't want to look like somebody who has no credibility. But we really have, in the last week and a half since bond yields, since they lost control of the bond market, you've seen them really change. The weakest are the wallflowers, like the most incompetent, like the guy in Chicago. What the hell is his name? Goolsby. Like those. We know why he's going to say what he's going to say, right? He's bought and paid for. But really, I think it's an open question with Powell. He starts every presser after they raise rates with, "We're doing this for the American people," and so you either are or you aren't.
Well, absolutely. I think the last meeting, the presser, was probably the first time that I felt like he was less confident in his stance than he's been, for the rest for all year. And it was just a slight kind of change in his tone and how he answered questions during the presser, but it didn't feel to me like he completely turned. It just felt like this was the first time he seemed a little bit less confident in what he was doing. Yeah,
I thought he looked like he was on meds. I was like, that was my first tweet. I've live tweeted every one of these bloody things, and it's like I didn't know that was going to be part of my life experience. But I learned this a long time ago. You study the art of lying. It's called kinesics, and you can see through people's body language and hand signals, and certainly in rate of change versus what they used to say. He used to be just upright. I'm doing this for the American people. We're going to stay vigilant. And you're right. I think that that's a very astute observation. And subsequent to that, I don't know if he must have told these guys to all come out on Monday and give dovish Fed speak. It's not like it came out of nowhere.
I know that. I noticed that. I was like, where's everybody dovish
this morning, this guy Waller, who I was ripping on, Waller, we're going to make you famous, Tracy and I. And I'd encourage you to do it because it's the people that get screwed, right? When you say, okay, when Wall Street calls you and says, hey man, bond yields are going up too fast, you got a turntail. Well, now oil's going up 30% in your face and the bond market's running away from you. So it's not like they can just do what they need to do for the elites and it doesn't pound the people. That to me is them losing control. Waller this morning quite literally said, Tracy, the last 3 months of inflation data have been very good. Okay, you used a time horizon that we can chart, where oil went up 35, 40%. The CPI went from 2.97 to 3.7. And you use the word very instead of good. It's just an out fucking right lie.
Well, it is. Housing's gone up, energy's gone up. Obviously, the Fed doesn't include that, right? They only core, nothing that you actually use is in their metric. But, when you're looking at inflation, we had a hot a slightly hot print today, right? And most of that was due to housing, so a little bit higher in services. But, I mean, nothing's getting cheaper by any stretch of the
Not
imagination.
even close. And I'd, I'm of course trying to enlist you in Hedgeye Nation on these people, because I don't think that they can, if you put, and I'm the lesser of the two of you, which is great, but Wall Street Silver, Chai Girl, and this Canadian guy, together, you have like a lot of followers, right? And you're not really allowed to lie to American people when they already know they're being lied to, that obviously. I just don't think you can.
No, you can't. You have to be. Just can't, because people know and people see through it, and you need somebody to go, oh, finally somebody sees the same thing I see, right?
Right. I mean, this is kind of, I've been using this all week, but the head of UFC, Dana White, he said, look, we know the state's lying to us. We know the elites are lying to us, and he's like, we're just not going to believe it anymore. Like, we're not just not going to take it. So I do appreciate, like, I mean, you just staying on the line there every day. You don't have to do that, right? I mean, it takes courage, it takes credibility. It's something that I know your community, the one that you really have is your close followers are, they must be appreciative, because the people, they obviously need a voice on this stuff. But enough about that. This, you've written about this, or you talked about this, and you just mentioned it again on housing, because that too is not widely understood. This mortgage cost squeeze. Can you talk about that?
I mean, mortgage rates are getting higher and higher. Obviously, that squeezes people. That takes, especially, it's going to be most difficult on first-time buyers. And then the problem, it's creating like a self-consuming black hole. The fact that nobody with a mortgage that they got at 2-3% is going to sell their house right now and get into a 7.5% mortgage rate, right? So we have less housing on the market, and yet you have first-time buyers that can't afford housing right now because there's less housing on the market. You have housing prices are higher and being squeezed higher, and that certainly didn't help during the pandemic when they went to zero, threw everything at it, and so that certainly didn't help as everybody was scrambling to buy houses and depleting the housing market essentially. And so now that you're raising rates, it's creating a bigger problem. I just call it the housing black hole.
Yeah, I mean, it is. It's it's interesting. Just bringing back my homeland in Canada, it's the same black hole, but it's in the media, in the Canadian media, it's a more obvious black hole because people are allowed to talk about it. So in the U.S., of course, you have a higher low, right? Like the elites got all the money, and the screw you to the 50% of Americans that don't have any money left anyway. And if you want to go get a house, I mean, just work harder at J.P. Morgan, right? Or actually, no, I think he said the other day that now you're going to work 3.5 days. You're not going to own anything, and you're going to like it. I think, due to AI. I think that was, he didn't say it that way, but that's kind of how my Canadian ear heard it.
Right.
But in Canada, like I was, just there at my brother's place at the end of the summer, and if you have like CBC or CTV on, I mean, it's a pretty steady appetite of what you just said. Like the common person with a common budget and a common problem on mortgages, like it's a top 3 at least topic. In addition to the wildfires in Canada, that's all people talk about. I mean, they can't afford to live in a place with these kinds of mortgage rates.
Yeah, well, and I think the Canadian housing bubble's gone on for a lot longer than the United States as well.
It's a rolling bubble.
Right? I mean, it's pretty, it's pretty much left to lower left to upper right-hand corner is what that market looks like, which is just insane. And so, I can't imagine that it's wearing on people just because it's been for years.
Yep. And one other topic before I take questions, and they're loading up here. If you have questions for your favorite tweeter here, Tracy, then pop them into the queue. The topic of what's happened in the junk bond market, or high yield junk. I mean, this morning I tweeted this chart, which, unless you're living in a cave, which a lot of people do, they're trolls, right? So that's the kind of where they domicile with no mortgage. But we have a lot of rent-free space in their heads. And good day to you. This is a free broadcast. But if you look at Jen Ryan, if you can show the chart that I was showing on high yield. I mean, high yield. First of all, when people tell me they can't see what's going on economically in credit, I'm like, do you have a chart of credit? I mean, are you an idiot? Talk about being dumb. I mean, that's a pretty obvious bear market chart. What do you think about that? What do you think about what's going on in junk bonds? What do you think about what's going on just generally in credit?
Well, I mean, as far as junk bonds, the problem with junk bonds is, the yield is so high right now. What is it, 9.62% or something like that? But if you look at bankruptcy levels of those companies, that's going up. And so that's going to be a major problem when you're looking at. So I think that if you're going to be in that market whatsoever, you have to be very careful on of what you're doing. I mean, I would say to the average person, stay away from that market. It looks like a tinderbox to me, because credit ratings have gone down, you have bankruptcies going up higher and yields pushing higher. So to me, it's a powder keg in that particular market.
You got a lot of powder kegs. I mean, these things, when
there are a lot right now.
Yeah, they are. I mean, what could possibly go wrong when you have all these things happening, at the same time? I actually have a pretty long list on slide 62. We call it going from stagtember, which fits, Tracy Shuchart's stagflation view, which I share. So we call it stagtember instead of September, and we go for old Shocktober. Like that list of items. I don't know if you can see them, but or if you have any thoughts on any or all of them. But I mean, everything from the child care cliff to all these government spending plans, or the strikes for that matter, SNAP benefits rolling off, student loans rolling off. I mean, when you have as many powder kegs that you've highlighted so far in our 37 minutes of this discussion, and then you just add all that on, which is 100% certainty that it's happening right now in October. Right. You just got to buy stocks, right?
Yes, run it right out. I think if you're looking at the broader markets, I think what people are looking at is that, there's not a lot of places to park your money right now. U.S. is the most liquid market in the world, stock market. And so I think it's getting, a lot of, push because of that. And I think also, obviously, when you're having geopolitical risk elsewhere, you're going to have money leaving sketchier markets and heading to more liquid markets. If you look at emerging markets, they're doing terrible. Money's leaving quickly.
Yeah, it's, China's been a disaster. But again, that's like, I call that the Titanic, right? I mean, it's sinking, the cycle's happening, credit's happening, all these powder keg items are there, and you just light the fuse, and then it all goes down slowly and then all at once. I mean, it's crowding into the place where you can find liquidity. To me, like when I watch the bond market trade, for example, or watch those 7 stocks trade, that's what it is, right? I mean, you got somebody running $1 trillion in New York, and it's a diversified fund with like a lot of fixed income in it. When you're literally powder kegging it every day and losing money every single day in those positions, at some point you got to sell $100 million worth, $100 billion worth of bonds and buy those 7 stocks because there's nowhere else to go. It doesn't mean that those have to go up every day after you did that.
Right. Well, and then you have, all of these ETFs, all these diversified ETFs, all have the same stocks in them.
Yep. So. Yeah. Same thing. Yeah, it's fun times. I'm sure we'll look back on this as the great buying opportunity at big time lower highs. On questions, if you don't mind, Tracy, I'm going to ask other people's questions here. To start, the easy one. This is actually, you have notes and thoughts on this anyway. The topic of the SPR. So this one's from Don. Tracy, what are your thoughts on the draining of the SPR? How vulnerable does this leave the U.S. considering the recent actions in the Middle East?
Well, I am of the opinion, I'll state my opinion. I think this is very dangerous and very negligent on behalf of our government. When we had, the oil embargo of 1973, October of 1973 to March of 1974, that's 5 months. We have 17 days worth of SPR left to, get us through. Now, I understand the other side of the argument. We didn't have shale then. We have a lot more production. But if we had a catastrophic event, it's not like you can just pump more immediately. It doesn't work that way, right? And so you would still need the SPR. And there are many times that we have used the SPR. We had to use the SPR for Katrina. We had to use, so there are times in modern times that we've had to tap into the SPR. And so, again, I am of the opinion that I think it is woefully negligent of our government. But I understand that people may have a different opinion of me. I think they're wrong.
Yeah, I think you've called it the bureaucratic petroleum reserve.
Exactly. And I think that, I just think that using it as a piggy bank, and this is, Biden is the first administration to drain half of it, literally, to not move oil prices at all. We're still at, $80, $85. But, in the past, we have seen administrations kind of use it as a piggy bank where, say, the Obama administration they did use some of it to revamp the SPR. It was in badly need of repair. So they sold barrels to repair the SPR and then, kind of set that out. But they also used it for kind of their pet projects. Oh, we need some money for this. We don't know where else to get it. Let's sell out of the SPR. And that's just for, political, I want my projects going through. And so I just think that it's not a piggy bank and it's there for a reason.
Yeah, I mean, all these decisions were made, right? The decision to make that move in the SPR, the decision to ramp deficit spending into a slowdown, the decision to not go for another rate hike when you should have, so the bond market did it for you. These are all, I don't care if you're political, apolitical or not, those decisions happened, and so did the price action. So you got to deal with it. It is what it is, right? On the price action itself, by the way, we only have a couple minutes left. It's interesting. I've of all the questions, like people are all asking, like, where do you think oil's going to go? So one, just to paraphrase, like one guy, Daniel's like, can it go to 100? And another guy just called out, and they're both guys, David from PA, asking Chai Girl, front month this is interesting. Front month WTI crude trades $84 on the 2033 contracts, not like. In the year 2033, traded $56. So what accounts for such deep and durable backwardation? He's insinuating, like, does that tell you where future demand's going? So is it 100 or is it going to be 56?
Well, I think we're higher for longer. I mean, the curve is extremely backwardated right now, so that's telling us that it's a tight market right now, and that it's. So I think, and just because of the fundamentals of the situation, aside from what the structure of the curve is telling us, that oil prices are set to be higher for longer. Now, obviously, you can always have changes in the curve depending on how supply demand fluctuations. That said, I think we're in for higher for longer. I don't want to say $100. I think at $100. You're going to start creating demand destruction. And I think that's not good for anybody, right? It's not good for any economy, particularly emerging markets. And so you really don't want to sustain prices at $100. So, if we could keep them in like the $80, $90 range, I think that's doable for most economies right now. Not that it's perfect, but again, I don't want to see oil prices spiking over 100, and certainly nothing sustained over 100.
Yeah, I mean, we saw that in the 08 recession. That was one of the easiest ways to make the call. Is as soon as you busted a move north of 100, that was it for the U.S. consumer. I mean, so good night and good luck on that. Last question. This is more of I don't know what you're going to say to this, but again, John Camprath gets 2 questions on the day. Good job, John. Tracy, I bet a lot of people do not understand the different sources and uses of light, sweet, and heavy crude vis-a-vis U.S. energy independence. Can you explain this?
Yeah, absolutely. So the US produces mostly light sweet oil, which when you go to refine that, mostly all you can get is gasoline out of it. Right? All the US produces very, very light oil. And so you can't get a lot of heavier distillates, heavier projects. So we import a lot of heavy oil from Canada, for example, in order to make those distillates. And so you know, if you want to call energy independence, we don't need any crude imports. That will never occur unless you want no distillate products whatsoever. Or there's the other team that calls, well, if we're a net exporter, then we're energy independent. But in my opinion, that doesn't make you energy independent by any stretch of the imagination, because you still have to rely on other countries for imports.
I'm glad I asked you, Chai Girl, if you don't mind me calling you that, because it looks like you're comfortable with it. I'm glad I asked you all the energy questions at the end, because you're like knocking them down like one by one. It's just like, well, I mean, a lot of these questions, like that's your expertise, right? That's your experience. And I really did want to get, like, first time on Hedgeye TV here, I want to let everyone get to know you first and kind of get through some of the bigger, maybe sometimes people think heavier stuff, but the answers on energy, I know a lot of people depend on you on that. So I'll be retweeting your stuff and engaging with you too. So watch out. Yeah.
I'm ready. Let's do it.
Well, you know what? You know who better be ready is Waller. He better be ready for Chai
Waller.
Girl.
Better be ready. Exactly.
Yeah. Waller, get ready.
We're all over him.
Yeah. Well, thank you for joining me. I appreciate it.
Thank you very much, Keith. I appreciate it.
Yeah, we're going to be up and down your backside, you Federal Reserve. I'm not going to call you what you know. I'm just going to call you who you are, which are, you guys are unelected people. If you're going to make comments like that, you're going to have to deal with me and Chai Girl, all right? That's it for me. It's going to be the Stein Bomber, and if you don't deal with me, you don't want to deal with that guy. I mean, on data, whew, Josh Steiner is the Stein Bomber, of course, and he's going to be live with the one and only Daniel Lacalle.